Most problems center around one of two things. It's a flood insurance requirement that somebody may not want, or it's a really high expense that they would love to be able to reduce. And so we're an engineering company at the core. We've overlayered, a variety of different expertises, that of the flood insurance expertise, the real estate investor mindset and expertise, and the engineering. And so we're really intertwining all three of these worlds together when we review a property to find solutions to help solve one of those two problems. Can we help get a property out of a flood zone to where the lender requirement is then removed? A lot of people don't realize that even is possible. Or second, are there different solutions that our team finds to be able to go to the flood insurance carrier and negotiate a better premium?
Welcome to CRE Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CRE Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is DJ McClure. DJ McClure is the VP of Sales and Business Development at National Flood Experts, driving strategic growth through partnerships and tailored cost-saving solutions. And in just a minute, we're going to speak with DJ McClure about innovative flood insurance solutions. But first, a quick reminder, if you like our show, CRE Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, DJ McClure. Welcome to CRE Radio.
Thank you. Very excited to jump into our conversation today.
Well, that makes two of us. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Yeah, I've been with National Flood Experts now going on 7 years. And, was fortunate to meet this company when I was early, after my wife and I moved here to Tampa. I kind of have a unique background. I was a tennis pro for about a decade for most of my 20s. So there's a lot of foundational business training, non-traditional in a lot of ways. And so always had an interest in real estate. And so when I met, our owner, Brad Hubbard, a number of years ago, I was just really intrigued by, this niche expertise that they'd built, and was really excited to get in and get on board. And, now I get to work with, real estate professionals all over the country, lots of different verticals. It's really been a catalyst for my own real estate investing journey. And it's a great, just middle of lots of industries that I get to intertwine with.
Cool. And tennis, I'm fairly familiar with tennis. My brother played college tennis. Where'd you go to college, or tell me a little bit about your tennis there real quick.
Yeah, I grew up in Western Kentucky, a small town called Owensboro that most people probably never heard of. But I stayed in Kentucky, went to Georgetown College, a small liberal arts school just north of Lexington. Played college tennis, great experience, afforded me to be able to, do a lot of international travel on the Spanish-speaking countryside. So fun fact, not many people know I have a master's in Spanish. So it's not in my day-to-day, but it comes in handy pretty often.
Yeah, no, that's awesome. Well, let's get into it here. flood insurance is not exactly a popular topic. As an insurance broker, I've had many calls at the closing where people find out that they're required to have flood insurance, and it's not usually a pleasant conversation. Um, so let's talk a little bit about flood insurance, national flood insurance, what it is, and how that works, and then talk about how you guys work.
Yeah, absolutely. I mean, flood insurance is one of those line items that most property owners won't really come into contact with until a lender has required it. It's usually an afterthought. Most insurance is centered around the property, the liability, all those other, big ticket items. And the flood insurance is usually a last thought or afterthought. And so whereas the 100-year flood maps dictate the legal compliance requirements that the lenders have to pass on to a buyer, it is usually later in the buying process when that comes up. And so it's one of these topics that, in providing this education, my hope is that more acquisition teams are looking for this, from really day one. You're just starting your underwriting. This should be part of the checklist and something that you're looking for and should be figuring in. But like you said, I mean, we get calls really all the time. Someone's 2-3 weeks from closing or refinance closing, and they just found out that the flood insurance is now, something that they have to rush to tackle, or else that closing is going to get delayed or not happen. And
Yeah.
so for us, we've built an expertise in being able to help mitigate a lot of different problems. Most problems center around one of two things. It's a flood insurance requirement that somebody may not want, or it's a really high expense that they would love to be able to reduce. And so we're an engineering company at the core. We've overlayered, a variety of different expertises, that of the flood insurance expertise, the real estate investor mindset and expertise, and the engineering. And so we're really intertwining all three of these worlds together when we review a property to find solutions to help solve one of those two problems. Can we help get a property out of a flood zone to where the lender requirement is then removed? A lot of people don't realize that even is possible. Or second, are there different solutions that our team finds to be able to go to the flood insurance carrier and negotiate a better premium?
Okay, so let's back up just one step here, because you mentioned a couple things. One is the 100-year floodplain and the flood maps. And I guess my first question is, um, recent experience I've seen where the flood maps have changed. Can you speak at all to the changing maps? And then, well, let's start with that. Just why do maps change, and what's the root, or the why is that, I guess? Why do the flood maps change?
It's a good question. So your local municipalities, your local counties and cities, those are who are in charge of updating the flood maps. And so, you look at however many different counties there are around the country, they're all on different timelines. And even within some of these larger counties around the country, even within that area, if you could picture like a checkerboard of all these different square panels, even certain panels will be on different schedules to where, parts of, cities like Houston will have certain areas of the flood map update, and then, the next area could be 6 months or a year later. And so at any given point in the country, there's infrastructural projects that are going on. Could just be new developments, new construction, the redesign or addition of roads. All these different things affect the flow of water. And so, these maps only update about every 12 to 15 years in most parts of the country, some not even that frequent. And so they're taking all of this new data into account. And all right, what's changed since the last flood map that came out in 2005? Has it made the fact that the flood elevation in some areas is now a higher risk, or could be a lower risk? And so then you'll see these map revisions published for those entire areas, and that affects, then the flood insurance requirements that are then passed on to the property owners.
So literally, you could buy a property at the time you purchase it. It could not be or it's likely not in the flood zone or below the 100-year floodplain. But when you either go to sell or refinance the property, you could learn that your property is now inside or below the 100-year floodplain.
That's correct.
Yeah. No, that's been a shock, I think, for a number of people I've worked with. So interesting, I didn't realize that it was the local communities that were responsible for updating the flood maps. That's noteworthy there. So you mentioned that you guys have your company, National Flood Experts. You have the ability to remove a property from a flood zone. What does that entail?
Good question. It's a checks and balances type system that exists. And so FEMA understands that the flood maps can't be to a certain granular level of detail at a building by building level. Also, the federal level doesn't know that if like a new property was built and something in the topography and grading of that site was done to, say, raise the level of that, of that construction site, there's no automatic informing of FEMA that that's happened. But in a nutshell, what we're doing is we're going to FEMA with a building by building level analysis and saying, here's your engineering to show that these buildings are outside of, the criteria of this 100-year flood zone. And so it's working with, FEMA directly on the federal level, to provide this engineering analysis, and they'll issue a map amendment, which is a federal document with legal description specific to those buildings. So it lives with the property. Even once the property sells, the next owner automatically gets to take advantage of that just the same. And then those buildings, which could be all or maybe only a couple of buildings on a property that are now classified as an X zone, which is outside of the 100-year. It could be the 500-year or beyond. Whereas the federal lending institutions no longer have a compliance requirement for the flood insurance.
Got it. And I want to make sure that people understand that kind of what you just said there. The flood maps will identify like the parcel as being in the flood zone. Is that true?
It can do the parcel, but in most cases, all the buildings are what are really, of concern and being flagged.
Okay. So if the piece of property or the property that you're purchasing or that you're refinancing is in the flood or below the 100-year flood plain, FEMA has the requirement that lenders that are backed by the government, I believe. So it'd be like anybody that participates in FDIC or that has a requirement of requiring flood insurance. Did I get that right?
That's correct. Yeah, there was a law passed in the 70s, Flood Disaster Protection Act of 73, I believe. And, so all federal lenders follow the same protocols, which This is what works to the property owner's favor. This is inclusive of Fannie Mae and Freddie Mac programs. If a property is taken out of the 100-year flood zone, right? So it could be, you got a 20-building garden style apartment site or, 10-building self-storage. This applies all the same across all the different verticals. But if those buildings have now been officially changed by FEMA, the map amendment lists those buildings now being in an X zone, that compliance requirement no longer applies. And so they're free and clear from the lender requirements, and they can work with someone like yourself, to insure those buildings however they would like, or choose to not carry flood insurance if that's what they think is best.
Right. And what I wanted to just kind of walk through here real quick was, so the property could have an exposure where there's a portion of the property that is in the 100-year flood plain or below the 100-year floodplain. but with your services, you're able to identify that the structures are above that. Is that accurate?
Yeah,
And
it's a
so that's how
building
you,
by building level
okay.
analysis that's being done. But this can be done for raw land as well. It's a little bit more complex in some scenarios, but you can also define a meets and bounds area of land. You know, if something's going to be constructed, for example, and then for all intensive purposes, you're building in that new area with X zone guidelines in place, as opposed to the 100-year permitting guidelines and requirements.
Yeah,
So there's a lot of variations to these projects um, that essentially can have a multitude of different benefits depending on the scenario that that particular property owner is in.
got it, got it. So, so what is involved for you when you remove a property, or you know, how is it that one is able, or how you're able to get these map amendments? What is it that you have to demonstrate?
Yeah, so I like to tell everyone that the flood maps are really created, you know, at a really broad brush, you know, type level. And so we're going in and we're providing to FEMA, you know, really two analyses that work together. So one is, you know, we're gathering, you know, different building specific characteristics, and then we're coupling that with a flood zone analysis that's also drilled down to the building, because you can have the flood zone elevation just across one property. It can increase by several tenths of a foot, even from one building to the next. And so it's really about getting down to these granular details and being able to present this building specific analysis to FEMA to show them that, you know, this building is outside of the criteria that you guys have set for this 100-year flood zone for that particular area.
Got it. So you then present that on behalf of the property owner to FEMA, or is that how that works, or does it?
Yeah, so we handle the entire process. It's completely hands off for the owner. You know, we work with FEMA's you know, engineering team that handles these projects directly, and you know, that's what enables us to be able to get these, you know, processed and approved, you know, with some pretty speedy timelines, you know, and get these to the finish line.
Got it. And so you mentioned in the beginning that one of the strategies is to remove a property from the flood zone. And then you said there were some other creative or different strategies that you're able to implement. Can you describe some of the other possibilities beyond the letter of map amendment, removing the property from a flood zone?
Absolutely. And this is where I think we're, you know, an extremely unique team, is that we've been able to deconstruct and really break down the flood insurance rating of, you know, FEMA's insurance program. And not everyone's aware that FEMA did a complete overhaul on their, you know, national flood insurance program about 2, 3 years ago. And it totally changed the way that they rate and calculate the premium costs, you know, for these buildings and flood zones. And this is inclusive of all flood zones, right? So your low risk and your high risk. In fact, they don't even use the flood zone as a multiplier anymore within how your property's premium is calculated. So there's a whole set of different variables that FEMA is using. Some you can see at the surface and some you can't, that all in together result in the full risk premium of that particular building. And so FEMA now tells you what your ceiling price is going to be for that particular building. This is called the full risk premium. And then some properties are still receiving a discount, you know, if they had a flood policy in place before this transition occurred, you know, 2 years ago. And so that discount is deteriorating year over year as a property's premium approaches, you know, that full risk premium number. And so what we've done is we've been able to, you know, identify certain variables that either can be optimized or improved, or correct an assumption that was made, you know, by the FEMA insurance system. And we go to the carriers and we say, hey, look, here's this particular set of engineering exhibits, this is what the rating should be, and this is how much the premium reduction we expect, would be as a result.
So the variables, are they, can you describe kind of, I guess, what I'm trying to understand? Because I do admit to not fully understand the flood insurance from the way the different zones, the way they named them, and then even like you said, this new and improved FEMA map is not something I'm fully familiar with. Can you identify or describe some of the variables that you're able to uh, identify and point out to the insurance companies to affect the rate?
Sure. With the new system, in most consulting scenarios, it's a combination of variables. In the older system, they had certain instances, like the flood zone, for example, that was one of the largest multipliers. So in the old system, if you got a property taken from the AE zone to an X, there was an automatic reduction in premium cost, and they removed that. So in the new system, it's now a combination of things that really all together result in that premium cost. And so a lot of it is demographic type details of the buildings, right? So some of your basic things like what type of rating is it? Is it 5 or more units? Is it more of like a other residential business type setting? How many floors is it? What's the location and distance to water? The latitude and longitude is now a component. So we've had scenarios where the lat long for the building was actually that of a building across the street. And so the premium was not correct simply because of they had a different building that they were actually, on the back end of the system that they were using for their rating calculations. And so what happens is that when we're able to correct one or more of these variables, there's a whole domino effect that then happens that results in a positive effect, in reducing the premium. And so, we're fortunate that, our team has a very deep and extensive expertise, in understanding these variables. And so for cases where, your client might be thinking, gosh, there's no way that you guys can help us. We're in this flood zone. There's nothing here. Those are the cases that our team loves to review, because, the flood zone amendment is only a portion of the different ways, that you can find a dollar savings. And so it's been an interesting journey these last few years in learning how to really get into this new rating system and be able to, find ways to help.
Yeah, I'm fascinated just by what you've described here. Also frustrated, I guess, that the information that's being used is not necessarily accurate to begin with, and that it's up to you to identify the errors in order to create a savings if that's a potential option. Um, so where this information, where is it that FEMA or whoever, I mean, I guess it's FEMA. Is it FEMA that's putting all together the information that's creating the maps, or is it still on the local municipalities that are updating the flood maps?
Well, the flood maps, they go through, certain level of appeal process and approvals as they go through the local and then final federal stage, before they're published. So as the new flood study is being handled locally, once they get to a point to where that's been, accepted, the local areas that it's affecting will be notified, and you'll receive a letter saying, hey, the flood map is changing for your area. It's typically a pretty general type letter that you're receiving. And so then there's an appeal process and time period, that exists. That can delay the forward progress of those maps, just in itself. And then on as it gets to the federal level, reviewed, approved, and published. And then there'll be a published date that's set for that area, so that people know that it's coming. But in many cases, it can be a shock if someone's not expecting that their property will now be brought into the 100-year flood zone. Sometimes the base flood elevations stay the same, so there isn't a massive change within one area. But like in Chicago, for example, the flood map changed up in that area about 2 years ago. And all it simply did was move the flood zone line south, maybe a few hundred yards off of the lake. Well, that in itself affected a tremendous number of properties that had to buy flood insurance for the first time. And so anytime we see a map that's been updated, we know for a fact that there's going to be properties that were just included in the mass that probably have some opportunity, to contest that and maybe get that reversed to where they're taken back out of the flood zone like before.
Got it. So, quick question, I just occurred to me. So the flood zone map sounds like that's, I don't know, is that changed, or has it been more about the calculation of the premium that's changed?
Well, I would say the calculation of the premium, because what's going on with the maps, nothing's really new. This has been the
Okay.
same thing that's been going on for years. Um, and so that, the flood maps aren't a multiplier anymore in the policy. So now that, FEMA has changed their rating system, this has had really the biggest impact on the flood insurance world, because what happens now is if you write a brand new flood policy, from day one, that property owner is starting at the full risk premium, meaning the highest dollar value that FEMA sees for that particular building. And so in those cases, they're not going to see dramatic increases year over year because they're already at the max premium. But for some property owners that, maybe they're paying 2,000, per building, but the full risk premium is say 5,000. They're going to keep inching up from 2 to 5,000 every single year as they approach that number. Fortunately, the cap is set right now at 18% that a property can jump, and increase each year.
Right. No, in the I think one of the things that also is worth noting. So FEMA runs the National Flood Insurance Program. Is that correct?
Exactly. Yes.
Okay, but there's also private flood insurance outside of FEMA. Um, and I'm just curious, when you guys are presenting the the information to an insurance company, whether it be FEMA or otherwise, have you found a different degree of response, or has it been uh, similar across the board?
I'd say the majority of our consulting is with, FEMA's insurance program.
Yeah.
The private carriers, they tend to have their own models. They're not using the data in the same way. And so most of our insurance consulting is going to be with, the NFIP policies. With the private world, they're essentially making an investment in that property, right? So they're going to assess their own levels of risk, how much appetite they have for that particular area. And they may assess a price just based on, we don't really like that area, but we're willing to take it on if you'll pay this dollar value. So it's just an entirely different model, whereas FEMA's program is standardized. Doesn't matter if you go to Assurant or Selective. In theory, you should be getting the same dollar value in the quote.
Yeah. No, that makes sense. That's been my experience with the private companies. It's been they like things that aren't in a flood zone or that are what they perceive to be above the flood zone more than actually in it.
Yeah, and a lot of
Um,
private carriers, they won't even take on a property if it's had a claim in the past. So,
right.
that's where you as an insurance broker, I'm sure you advise your clients to really think wisely, if when to file claims, because for these properties in flood zones, if a claim's been filed, it will eliminate in a lot of cases some private carriers from even considering it. And then if you've left the NFIP to go to private, let's say they had a very appetizing price and you took that policy. If for any reason you have to come back to the NFIP, remember, you're going to start now at the full risk premium, from day one.
Yeah. No, I'm curious. We've been talking about removing people from the flood plain or then the flood zone. Do you have any sense of the number of buyers that buy flood insurance that are not in a flood zone? I mean, because I'm assuming that the majority of this is all when it's a requirement based on a lender, um, lender imposed.
Yeah, for most people, that's when, flood insurance is going to be really brought to their attention. So if you're buying a property and, it's not in a 100-year flood zone, you may not even think twice about it, unless you have an insurance broker that has, brought it into conversation, said, hey, look, this may be something to consider, and you can put an elective flood policy in place, just the same as anyone else. And I think that's important to understand, is that you get a property taken out of the 100-year flood zone and reclassified into an X zone, it doesn't mean you can't still buy flood insurance just the same. In fact, many of our clients still do. What they're trying to do is really take advantage of the other benefits, the property value increase that comes with, not having a flood insurance requirement when you sell it, because the buyer takes advantage of that automatically. Not having a flood insurance requirement when you go into refinance. This is probably one of the biggest scenarios that can be detrimental to a property, is when they don't understand that, refinancing into an agency type debt structure increases the flood insurance requirements in many cases that you have to have. So there's all these different ancillary scenarios that really pop up, to where if you can reduce the NOI one way or the other, right? Whether it's the consulting or the flood zone removal, there's all these different benefits that then come from that for the property owner.
Right. No, that's a huge piece there, because if it's required, it just kills the NOI there. But if it's an option and you elect not to, that's up to you. Or if you elect to purchase it, then even if you elect to purchase it, you're going to have a better rate than if you were in the flood zone. Or actually, I say that historically that may have been true. I'm curious, have you seen, because you said the way the rates are figured now, that the zone is not as much of a factor. Are you seeing premiums reduce substantially when you're able to pull a property out of the flood zone?
Unfortunately not.
Yeah.
Anymore, you change the flood zone, it does not have an automatic change on, the current primary flood insurance. Now, whereas there can be benefits if, for example, you have a master property program that's in place. So a lot of these master programs will include a certain level of flood coverage in excess of the NFIP requirement when it's in a special flood hazard area, which is just a fancy term for the 100-year flood zone, right? So what's happening in some cases is that we're able to get a property out of the 100-year, and they're able to then go back to the master program, in some cases lower the deductible per occurrence to where they no longer have to carry that primary layer of flood insurance, really as a deductible buy down in those cases. And so that can be a cost savings in itself, because then they still have flood coverage, from a risk standpoint. They're just willing to take on, a different exposure type on the deductible side as a result. So, like I was saying earlier, right, this flood insurance understanding expertise, the investor, like this is really looking at this through a prism, all these different angles, and asking good questions to try to figure out, like, all right, this is what solution could be possible. Let's really get creative and see what different problems can be solved here. In a lot of cases, problems our clients don't even realize that kind of exist, and there is a solution to even help with.
Right. No, I was, it's been a little while since I've had to deal with this, but but I remember just that the couple of years ago, having the letter of map amendment, reduced the premium substantially, whereas now it's more a matter of like, it's just a matter of yes or no, either you're required or not required to have it. But the letter of map amendment, as far as the carrier was concerned, didn't produce any significant savings on the insurance. It was just more a matter of now you don't have to have it. And I thought that was a little interesting. But anyway, I mean, again, having removed the property from the requirement is a huge benefit to the property owner, especially if you're going to sell or refinance and trying to improve your NOI. So that's all good. So let's talk about how much does this cost to do? How are you guys compensated? How's National Flood experts? How are you compensated for this, or what's the cost to do something like this?
Yeah, the best part for any property owner is that we'll review any property up front at no cost, right? So there's really no barrier to entry. If you're curious, property's in a flood zone, you're thinking, are there any cost savings that could be possible for me? Um, and our engineers, we volunteer this time because we know statistically we're going to find a solution, about 45 to 50% of cases that we review. That's how prevalent this really is. And that's inclusive of all the different solution types, right? So we have, project costs that are associated to these different categories of solutions. So our map amendment projects, in many cases, the project estimate is, relative to the annual flood premium. And then on the consulting side, a lot of our project costs are relative to, the delta savings before and after, that we're able to create on that full risk premium. So in either case, it's a one-time payment to us. And, the great thing is that all these solutions automatically create a year-over-year impact. So you can really build that into the forecasting, of your property. And also, we're not even invoicing for those projects until after they've been approved. So there's really no risk. There's really no downside, to these projects, because worst case, if we're told no by FEMA or by the insurance carrier, everything stays the same. So it's really a guarantee that somebody can feel really good about, in doing a project with us. And, since we've done this really comprehensive review up front, we know, within 99% if that project is going to be approved. And so that's where we're comfortable putting that guarantee in place that the project is going to be, resulting how we had predicted.
Got it. And where you guys are able to operate, the name of the company is National. Is there any limitations on where you're able to help people?
No, not at all. We've done projects coast to coast, projects in places you probably wouldn't even expect: Virgin Islands, Puerto Rico, Hawaii. Those are always fun projects for our team. And no, I mean, it's coastal, it's inland, it's really every property type. There's really no disqualifier. If it's in a flood zone, we want to see if we can help.
And then what about size of property? Do you guys only work with commercial? Do you work with individuals? What's the scope?
Yeah, predominantly commercial. That's where we've definitely seen the biggest splashes from a cost savings perspective. Not to say that we can't help, with single family type structures. It's just not something that's, the primary focus initially. But that being said, all these solutions apply to any property type equally. That's the beauty of how this all works. So yeah, so we welcome anybody from any state, anywhere.
Yeah, got it. Got it. Hey, DJ, if we could, I'd like to shift gears here for a second. As I've mentioned, by day, I'm an insurance broker, and I work with my clients to assess risk and determine what to do with the risk. And there are three strategies we typically follow. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, then we look to see if we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. Could be clients, investors, market. In your case, I guess the flood maps, or it's global warming, or whatever that might be. What is it that you consider to be the biggest risk? And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance-related answer. And so if you're willing, I'd like to ask you, DJ McClure, what is the biggest risk?
I think right now, one of the biggest risks that I see among many is the number of properties that are, approaching a debt restructure. There's a lot of short-term bridge debt for a lot of properties that's coming due. And so one of two things are going to happen. Obviously, they're going to be able to, if they're able to put together the funds to structure a refinance, it's likely going to be into a different loan structure, or loan program, predominantly your Fannie and Freddie type programs being, the more fixed set options in a lot of cases. And this has a dramatic increase on the flood insurance coverage requirements. And so you could take a property that's only paying maybe a few thousand a building, and the new requirements, could add and more than double or triple the cost of what they're having to pay per building. And this isn't always something that somebody knows is coming. So if you're looking at a debt restructure and you're in a flood zone, sooner than later, you want to have our team or someone look at that, because not only could you increase the value of the property going into the refinance, which could reduce, the cash in potential that may be required by being able to show that lender a higher valuation with a better NOI. But you're also avoiding that flood insurance coverage increase that would come with that. And then the other option of that being the same is if a seller, or an owner is forced to sell because the refinance is not possible. Nonetheless, that flood insurance cost is counting against that sale valuation. If you're having to sell in that scenario, you're probably already selling at a lower valuation than your business plan has at that point. So again, if the flood insurance cost can be reduced, again, that helps on that sale valuation to try and recoup as much of those investor dollars as possible.
Yeah, great point. Well, DJ, where can listeners go if they'd like to learn more or connect with you?
Our website, nationalfloodexperts.com, has a tremendous amount of information and case studies, other testimonials we've done with clients, as to where someone can really, find some scenarios that may be fitting to them. They're welcome to reach out to me at info@nationalfloodexperts.com, and that'll come to me directly to be able to then take a look and see if we can't help.
Awesome. Well, DJ McClure, I cannot say thanks enough for taking the time to talk today. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Thank you.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.